What's up guys, welcome back to another video, and in today's video I'm going to show you a profitable strategy that can make you millions this year. This is a new year, this is 2025, and if you're a trader struggling to find profitability, I have your answer right now. And this is not like every other video you can see on YouTube. This is very different because this is a strategy I personally use and it have a proven track record. This is a strategy we have been using in my Telegram group and we have been very profitable. So if you want to find out how, stay tuned. So guys, this strategy is very simple and easy to execute. We just only have two type of model, which is the buy model and the sell model. But mind you, this strategy is for 2 time frames. On the higher we have a separate model, and on the lower time frame for confirmation we have another model. Hope you guys are following. Let's look at the higher time frame buy model, how you can execute trade on the higher time frame. And when I'm talking about higher time frame, I'm not talking about I'm not talking about the bigger higher time frame you have in mind. Some people might projecting maybe talking about the daily 4 hours. No. You can trade the 15 minutes, 1 hour, 4 hours, the daily. You get, but you use those time frame as your higher time frame. For example, if you want to trade the daily with this strategy, that means your entry confirmation will be on the 4 hour. If you want to trade the 4 hour with this strategy, that means your entry model will be either 30 minutes or 15 minutes. Anyone you choose, they're almost same thing. So if you want to go lower, you can go to the 1 hour, the 15 minutes with that. But the 1 hour, your lower time frame confirmation is the 5 minutes. If you want to use a much more lower one, which is the 15 minutes, and that's the lowest I will advise anyone to go to, the 15 minutes, your entry confirmation will be on the 3 minutes. It's very simple, guys. Very simple. So this strategy is very powerful for scalping. Very powerful, very powerful. But let's dive in to find out how powerful and effective the strategy is. So on my left hand side, you can see I have the higher time frame buy model. On my right hand side, I have the higher time frame sell model. So let's go with my left hand side first. So now what can we see here? We can see we have a break of structure here. Then before the break of structure, we can see there's an internal structure here which created an inducement here. So now before you can enter any trade, there must be a valid break of structure, number 1, and there must be an inducement. So we can just coin a phrase which is no inducement, no entry. So if you don't see an inducement, please don't enter, because that particular trade is less likely to become profitable when you enter without an inducement. So want to see an inducement. So the market created this inducement. You get what I'm saying? So we need to see this inducement first before we can even think of spotting an opportunity. So now after the break of structure is valid, we need to see an inducement. Then we'll now wait for the market to retrace back into the discounted zone. Hope you guys are following. This is very simple, guys. Very simple. Wait for the market to retrace back into the discounted zone. Then automatically the market will obviously react here, to save the early buyers, because now the market need foil. So the market needs to take out some people to continue its journey. You understand? For example, if you're maybe traveling from maybe Abuja to Lagos, or maybe from Lagos to London, or anywhere with flight, or maybe you took a car, you will need to stop on the road to refuel. Same thing, it's the same logic when it comes to liquidity in the market. The market can't just be moving. No, it needs to stop by and get full. So this it serves as a foil to the market. Hope you guys understand that concept. It's very, very simple. I'm trying my best to make it as simplified as possible. Guys, trading is not hard. It's only hard because you don't understand the most basic concept. If you understand the most basic concept, you understand that this thing is not as hard as you feel it is. So let's continue. So obviously these people were deceived, because some people have their demand zone here and they will have buying here, but the markets will obviously deceive them and take them out. So after they've been taken out, what next? What do we have here? After they've been taken out, what do we have here? The market now tap into our original order block. So after it taps into the order block, what do? We look for our lower time frame confirmation. But before we dive into our lower time confirmation, let's look at the higher time frame sell model. After this, we're going onto the lower time frame confirmation. Now, in this scenario, when price gets to your POI, that's the valid demand zone, after the inducement, you don't just buy. No, we need to see added confirmation. That's why I told you this strategy is very, very profitable, because it increases your profitability close to 50%. Because if you just trade this strategy blindly like this, your win rate will be around, let's say, 20, 25, 30. But if you add confirmation, it decreases by 40 to 50%. That means you have close to 80 to 70% win rate. Hope you guys are following. This thing is very, very interesting. So let's look at the higher time frame sell model. So on the higher time frame sell model, it's still the same thing, but just opposite. We have a bearish trend. We obviously want to see a break of structure, but mind you, this thing is very simple. When you are seeing a break of structure, you want to see an internal liquidity created by the market that broke structure. You guys are saying this internal liquidity is the one that broke structure. So a lot of traders will obviously want to sell here, and mind you guys, it does happen in the market, because traders that do trade flip zone, this is a flip zone, you understand? It does happen, but most times the market always use them as inducement. Hope you guys are getting what I'm saying. So you have to be disciplined, because you might be tempted sometimes, because sometimes the market might use this and just tap into this supply zone and push downward. So you have to be disciplined and patient. You guys are getting what I'm saying. You have to be patient and wait for this setup. Guys, don't worry. When I'm done teaching this, I would love to see you guys feedback on this particular model. You guys should tell me how effective it has been for you. So back to our teaching. We want to see a break of structure, then an inducement, obviously. Then we want to wait for the market to move into the discounted zone. Then we want to see, sometimes it might react, but most time it will react, because the market needs to, just do some drama to just give people confirmation. There are a lot of people trading this, people that are trading trend line, you understand? They will say, okay, the market's rejected from here, so they will buy. So there are a lot of people even hoping to buy here again. So this thing has the way it works. The market is just setting a lot of traps. So that a lot of people trade different strategies. Some people trade trend lines, some people trade, some people enter with candlesticks, all those kind of things. I don't want to go deep into that. I don't want this video to be too long. I just want to teach you guys this model. But the market is will give most traders their confirmation entry at that moment. So most traders will obviously sell there. You understand? But we're not selling. We wait for the market to take them out before we finally get into the trade. So what happened? The market took them out and tapped into the supply zone, and we will look for our lower time frame sell model before we can sell. We can't just sell blindly. Hope you guys are following. then we wait for our target. Our target is the opposing liquidity demand, and in this case is a demand zone. So if it's here, opposing liquidity supply zone. Very, very simple, guys. So let's look at the lower time frame buy and sell model. So the lower time frame model is very, very simple. I simplified this strategy for you guys because I realized that trading is more about simplicity. It's not about having a complex strategy, because the problem with complexity is this: if your strategy is too complex, the chances of you executing it consistently becomes more difficult, because now trading is a journey. Trading is not something you can just do under today and you assume, okay, you've arrived. No, trading is something you need to keep on winning consistently. You cannot just only win in one day and hope you keep on winning without the right plan. No, you need to have plan to win every day, week in, week out. So that's why I made this very, very simple for you guys. So now this is how the lower time frame confirmation for the buy model. Let's look at the buy model first. So we want to first see a change of character, or market structure shift. So after we see a market structure shift, which ultimately tells us that, okay, the market is changing its direction from bearish to what? Bullish. So after we see that, we want to wait for the market to retrace back into that supply zone. So it's a supply zone in this case. Some people call it breakout blocks, but people that trade support and resistance will call it is a support. I hope you guys are following. These things are very simple. You don't need to complicate trading. Trading is very simple. People use different terminology, but you just need to understand. So this plays out as a support to hold price. Then you put your limit order, or if you want to execute it manually, you can put it. Then put your stop loss below this blow. Then we aim for our higher time frame demand supply zone. Hope you guys are following. This thing is very simple. We're going to take a practical example, but I just want you to understand the schematics first. The strategy is very, very mechanical and easy to execute. So let's look at the lower time frame sell model. So it's still the same thing, just reverse. So the market is reversing from bullish to bearish. So we also want to see a change of character or market structure shift to indicate that, okay, truly the market is no longer bullish, it is bearish. So after that, what we have to wait for the market to move into that our breakout block zone, or sometimes we can call it a demand zone, support to resistance. This place will be a resistance zone, So when the market is there, what do? We short. Then targets will be where we short. Stop loss here. Targets will be our higher time frames. In this place will be our higher time frame demand zone. Hope you guys are getting it. So let's dive into a practical example. Let's look at a practical example. I'm on the Euro CHF chart on the 15-minute time frame. So in this example, the 15 minutes is our higher time frame. So let's look at what the market is telling us here. You can see we have a break of structures to the upside. So the market is bullish at the moment. So let's see what happened. So from here, you can see we have a break of structure to the downside. Hope you guys are following. We have a break of structure to the downside. All right, that's what we can see. So now we need to mark out the internal liquidity. I need to ask yourself, does this particular trade has an internal liquidity which the market could use as fuel before it reaches our initial? In this place we have a supply zone. Does it have? Yes, this has, and that's what I can see from here. So this is our inducement here. So this is our inducement here. It's our breakout structure. Let me label them. so that it can be much easier for us. So that it can be much easier for us to see. Now then, you mark out our valid supply zone. In this case, this is the valid supply zone. Yeah. So we are waiting for the market to get into this zone. Then when the market gets into this zone, we will go to the lower time frame to look for opportunities. So let's go on to the lower time frame. Understand? So this is how you're going to execute the chart. This is how you're going to execute your trade practically. So when you see all your parameters aligned on the higher time frame, what you just need to do, go on to the lower time frame and be waiting for the market to get into your POI. So let's just name this POI, which is point of interest. Point of interest. So we are waiting for the market to tap into this one. So let's just go to the 3 minutes. So that's our lower time frame for this particular trade here. So we're waiting for the market to tap into that zone. So let's see what the market did. Okay. We are still waiting. And you have to be patient, guys. You have to be very, very patient. So we are still waiting. Yeah. Finally, what are we waiting for now? We are looking for a what? A change of character. Hope you guys are following. Let's have a look again. We are looking for what? A change of character. Because we want to sell, right? So we want to look for a change of character before we can actually sell, because we need to confirm the trend of the market. We need to confirm if buyers have actually lost the trend. So that's what we are trying to do here. So we need to be patient. Okay, so this is our higher low. So if this zone is broken, so if this is broken, it signifies a change trend in the market. So let's see what happened. Okay, the market broke it. So anytime the market breaks it, what do? You align the market out, then you enter your sell. So you can get in right now. So you can get in right now. You're short here. The stop loss were above here. Hope you guys are following. This one is very, very, very simple. This one is very, very simple. Very, very simple. So after we've gotten our entry, what's expected of us to do? I remind you, your stop loss will be above this high, because sometimes the market might, do some different kind of stuff, but we want to avoid all those hustle. That's why I give you guys a simple template, because there's a way we can refine the trade, but it's much easier this way. Because if you want to refine the trade always, you will miss out on a lot of opportunity, and it's very, very painful to miss out on a trade. It's painful for you to waiting for a trade all day, all night, then it finally comes, then it never taps to your lower time frame POI. It's very sad. So it's better we just do it the simple way. So after we've gotten our entry, what we need to do, you need to know your TP. If not our stop loss, we need to know your TP. So what we do, you go on to the higher time frame. 15 minutes is our higher time frame here. We're going to look for the higher time frame demand zone. In this case, that's our TP. That's our target. So this is our target here. This is our target. Or we can target to clear this low, but this is just our target. So this is our target. We're going to get your TP down here. So this gives us a good 1:2 trade. So let's see how it actually played out. And you can see TP smart, very, very easy, smooth. You can see, guys, less stress. So let's take another example. So guys, we have another opportunity here, and this is still on the 15-minute AED card. If you ask why we're using 15 minutes, we are using 15 minutes because we want to scalp the market. So if you want to swing through, you can go onto the higher time frame. You can go to the 4 hours. Remember I told you 4 hours higher time frame, lower time frame confirmation is 30 minutes, 15 minutes. Same process. 1 hour higher time frame, lower time frame 5 minutes. Same process, same thing. You understand? So let's look how. So let's check this one out. So let's look at what the market is doing here. We need to understand market structure first. So we have a break of structure to the upside here. So we know the market is in a bullish trend. So we are hoping to buy. So you need to ask yourself, do we have an internal structure here? Yes, obviously we have. There are lots. Look at what we have here. This is an inducement. Understand? Because it's the flip zone. This is the last one that caused the break. So this is where a lot of traders are hoping to buy, and it's a trap. We obviously know. So now that we've identified everything, what do? We wait for the market to come into our POI. You see how it is? Very simple. Your inducement, let me make it clear for you guys. Your inducement is the first origin of the market that broke structure. You understand? This inducement is mainly for people that trade flip zone. So you just need to think in advance. So automatically ask yourself, we have how many lows here? We have 1, 2, 3, 4. But ask yourself, which low was immediately responsible for the break? Is this one. So this one automatically becomes the inducement. Guys, this is very, very simple. So if this is inducement, that means the market can use any of this. So these are our POIs. Very simple. So let's see what happens. We go on to lower time frame and see what happens. So we wait for the markets. So wait for the market to tap into our zone. So let's see. We're waiting patiently. You just have to be patient, guys. You just have the patience. You know, the market is the biggest world transfer. They transfer money from the impatient to the patient traders. So you just have to be, you know, it's very, very important. So let's see what happened. Let's see. Okay. Okay. Just have to be patient. Sometimes it takes time, sometimes it doesn't, you know. So you just have to be. I think that's the greatest prize we need to pay as traders. You just have to be patient, you know. You just have to be. So finally, it took those early buyers out, and it's on our POI. So let's see. So we are waiting for what a market structure shift or change of character before we can move on. So we found it. So this is it. Market structure shift here. So automatically this is our breaker block. But now I want to show you guys something. This is very different. In scenario like this, where you see the market breaking out with full momentum, sometimes the market might not come back. But now, if you have a positive risk to reward, you can buy. What do I mean by positive risk to reward? A positive risk to reward is minimum of 1:2. That's to me. So if you can get 1:2, you can buy. You know what I'm trying to say? So now when you see a huge momentum like this, you can buy immediately after that candle. Because sometimes when you see a situation like this, the market might not come back to our entry here. So we can buy here. And now what will be our TP? We found our SL. What will be our TP? We'll go back to the 15-minute. You know, confirm. Then mark the supply zone here. Then aim for that. So this is 2.6. So this is a very good risk to reward, you can see, guys. So let's see what happened. Let's go on to lower time frame and just follow the market and see how the market play out. Guys, as you can see, it tapped into it. Then what do? We wait patiently for the market to hit our TP. So let's see what happened. See what happened. Finally, TP smashed. You can see, very easy to replicate.